Good morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call. Stocks were lower Friday night as bond yields sounded the inflation alarm. We saw pretty big spikes in bond yields across the board globally. Just a quick one. This is general advice only. It does not constitute financial advice. If you need, do not make investment decisions based on this advice. If you need help, go and consult a financial professional. So, just having a look at the market map here, you've got the likes of Microsoft and Apple there that are fairly defensive. Microsoft's been brutally hit over the last probably sort of 6 or so months. And Apple really hasn't been, part of this massive rally. And they are sitting on just an absolute mountain of cash. So we did see oil prices spike overall, and they're, around that. We got that crude WTI at 102 mark there, but I think Brent's around the 110 mark. You can see a big chunk of these chip stocks on the left-hand side there. Nvidia, Broadcom, Micron, which is memory, AMD, which is a bit of CPU, GPU, Intel CPU, Tesla, which has been running with the chip stocks lately, all hammered pretty badly. But surprisingly, some of this software, which has already been hammered, actually, which you can see in the middle cluster there next to Microsoft, has actually rallied up a little bit, because let's face it, the damage has probably largely already been done in those stocks. When you have your sector described as something apocalypse, it's never normally good. The oil sector obviously heading a little bit higher as well. I'm pretty surprised that these guys haven't performed better, to be honest. They're absolute fortress balance sheets in these guys, and they're earning a great deal of money as it stands at the moment. You can sort of see now the technicals have sort of swung a little bit. The ASX is down somewhere around the 1 to 1.5% mark in futures on Friday night. But look, the bond vigilantes are back and oil's ripping, and look, this is a huge test for this week. We've got Nvidia earnings on, I believe, the Wednesday night, which will be the Thursday morning here. And that SOX index was down 4% on that AI CapEx sustainability focus. So look, this week particularly, these aren't enormous moves here, but this is absolute game time for the equity market. A really pivotal sort of moment. If we have this Hormuz situation continuing to lengthen out, which it absolutely looks like it's going to, and then we have Nvidia show any form of bump in the road, negative price action, or anything along those lines, which is a little bit unfair on Nvidia for this whole thing to be all dependent on them. But and then we start to see hot inflation numbers. This thing is absolutely cooked, and I wouldn't imagine that you want to be buying, necessarily buying the dip in that first move down over the next month or so. We had those really hot PPI numbers last week. They're usually a 1 to 2 month lead time into CPI numbers, and we'll see if that happens. But if they go anywhere near, it's going to be a significant blow to the market in future. So they're going to be the big things. There's also a G7 finance ministers meeting in Paris this week, which is sort of today and tomorrow. I don't expect too much to come out of that. We've got Australian, employment numbers this week as well, and a few bits and pieces in terms of the US and global markets, but nothing. I think inflation really and employment are going to be the big dogs, and we just got a little bit of manufacturing, and some fringe numbers over the course of the next week. But I think that we are very, very focused on on Nvidia and on getting to some form of resolution. There was some form of positivity on over the weekend, and we were sort of hoping to see if indice futures would open a little bit higher, just on the back of there being a tariff deal. But it doesn't really appear to be. There doesn't seem to be any sort of movement in those markets at all. As you can see here, gold was down, silver got absolutely trolleyed. and was down sort of 11% for the week after being up like 15% for the week. So that was a bit of an odd one. Copper, or basically, these higher bond yields are going to smash risk-on sort of stocks or cyclical stocks, and that's what we saw overall. So even lithium and uranium and the likes are also down as well. So with this has always been bubbling along in the background. For anyone who watches this on a daily basis, I will have talked about it, but the equity market does tend to just breeze through things until earnings is over and put their fingers in their ears and their head in the sand, particularly in the US over this period. So we had multi-decade highs in some of these UK markets and Japanese markets in terms of bond yields. So you can sort of see this is the US Treasuries. So the green is the right axis, which is the benchmark Treasury yields, and then obviously when we see a spike in Treasury yields, we sort of tend to see a dip in the equities, and we've just seen them both rallying together over the course of the last particularly the last month or so. So or the course of most of this year, but if we start to get back through these these multi-year highs, we're going to be in a fair bit of trouble. And I think there'll be, for the first time, that the equity market sort of sitting up and taking a little bit of notice. But overall, I'd be this week you'd be taking a bit of a defensive stance, particularly Australia. I think investors should be going, obviously first things first, go see your accountants and catch up on what you need to be doing post-budget. I've got an article on Live Wire Markets. You can follow me there, or you can, or you can go to our website as well. We've got some information there coming in from accountants and alternatives for investments. For those of you who don't watch our podcast, you should subscribe now, either on Spotify, YouTube, Apple Podcasts. For those of you who are watching live on social media, for this platform every morning, if you want daily updates, just go to, on your favorite platform, just go to @MPC Markets and subscribe today. Like and subscribe and all that. Look, big picture is markets are testing. Are going to be testing the downside, I would imagine. So I think this is a bit of a make or break week, really, for global risk. And I think it's a week that you very much need to be agile, because I think a lot of the things that we've been ignoring for the last 2 or 3 months could come home to roost. And all it needs is just a slight catalyst to get shifting to the downside after this very significant rally. So look, guys, have a great day, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.